What's good, guys? Welcome back to another video. It's a new week, and you know what that means. It's a new set of opportunities for Bitcoin, and I'm going to break it all down. Not only the weekly setup, I'm going to get into the daily setup we can look for today, because if there's one thing you need to know about this Monday is that we have news, and you know what that means. Today's probably going to be a high probability trading day, and this is pretty rare as well because we don't usually get news on Mondays. But anyways, just right before we get into it, if you're new here, welcome. My name is Shwen. I've been publicly making these videos for the last year and a half, and I've been documenting the success rate of these trade calls that I'm making. And so far, at around 200 trades called, I am at about a 78% win rate. So all that means for you is that if you're new here, chances are you're in the right place, because I tend to be right a little bit more than I'm wrong. But with that out of the way though, let's get into the Bitcoin setup for today. Now, just kicking things off on the weekly chart, we are definitely looking for a bullish weekly bias. Now, this can be slightly misleading in the sense where, yes, we have had a bullish candle close, and yes, we are supposed to be looking for longs heading into this week, but we are also heading right into some sort of bearish resistance. Now, is this weekly kind of order block going to change what we're going to be doing in terms of the intraday chart? Probably not, and I'm going to explain why later. But just for now, weekly bias, we're looking for longs, and the moment we go down into the daily chart, we can immediately see that we've got a couple of highs that we can take advantage of. That is good news to behold, because oftentimes what you need to understand about the markets is that every major movement in the markets always has some sort of reason behind them. And in the case of the system that we use, one of the most consistent ways that you can anticipate where the market's going to go to is whether or not there are going to be liquidity points at these spots in the market. So far, both of these levels, I think, are going to be a good gauge for where we can expect Bitcoin price action to go to, at least for this week. Now, with that out of the way though, quick reminder as well, before I forget, you guys have less than 5 days left. In fact, at the time that you're watching this video, you guys have less than 4 days left to sign up and apply for a $25,000 giveaway. If you guys don't know what that is, I'm basically giving away like multiple spots in our flagship programs. If you've ever been on the fence and you want to learn trading from me, but you just couldn't afford it, and for whatever reason you were not able to join or you were not able to afford, this scholarship is a great opportunity to get in. Absolutely for free. There's no catches. We're not going to sign you up for some sales funnel or whatever. Just make sure you sign up and apply within the next like 4 days, because we do need time to read the applications. Now, with that out the way though, let's get straight back into the daily chart. And right now what we can see is that yes, we have a bullish daily bias. So far, the entirety of today has been trading towards the downside, which is actually a good thing, because here's one thing you need to understand about reading bias. And this is something I think a lot of people struggle with. It's that they kind of have like one piece of the equation, but not the other half, which is, okay, people tend to understand, okay, if you're overall bullish, you should be looking for longs. If the start of the day kind of trades towards the downside, hey, what gives, right? But that's actually a good thing, because when you have a bullish daily bias, you want to always look for buys below the daily open or the weekly open, or whatever open of that candle is. So right now we're looking at the daily chart. So this is the daily open. So far we've been trading below it. This gives you an opportunity to kind of buy low before you sell high later during the daily expansion. This is literally the same method that we used to approach last Thursday as well as Friday. And not only that, but we've also done this plenty of times throughout the course of the last year and a half. And so far the success rate doesn't lie. This is a concept that works. Essentially, if you're bullish, you're going to be looking for longs below the daily open and looking to sell higher. Same thing here. If you're bullish, looking for longs below the daily open. Now, the moment I go down into the 1 hourly chart, immediately you'll see that price has only two possibilities when it comes to today. First of which is that, yes, you are coming back into a bullish order block at the moment, but you could also argue that there is a bunch of relatively equal lows right now. So right now, you also have the Asia low. As you can see right now, London is trading the majority of its volume underneath the Asia low. So there's only really one kind of scenario that you're going to be looking for today in terms that also aligns with the daily bias, and it also aligns with the weekly bias, which is you want to look for a liquidity sweep underneath these levels right here at 62,500. More specifically though, it's more like 62,400 to potentially 300. More specifically though, I'd say it's closer to like 62,300. Once you like get all of these liquidity sweeps out, you're going to look for some sort of a V-shaped recovery. Basically, liquidity sweep, right? Take a look here. This is a liquidity sweep followed immediately by a V-shaped recovery. Essentially, we're going to be looking for the same thing here. Now, the way this is probably going to work is that this is at the moment a very strong value area, which essentially means once you go below the value area, that's actually where the discount opportunity is. You can use that to take a trade back to the other side of the range. Now, is this guaranteed to be the only setup for today? Absolutely not. Now, earlier on, I mentioned that today we're going to have news, which is pretty rare for a Monday. At 10 a.m., we're going to have high impact red folder news for the USD. And you know what that means? It means that you have a catalyst for volatility. Now, in case that sounds like a bunch of mumbo jumbo to you, the simplest way that I can explain this is that the majority of the major movements in the markets always have some sort of a reason behind them, or at the very least in the sense of news, they have a catalyst. Earlier on in the start of the video, I showed you how liquidity points are the targets, right? They are the reason for price to move in terms of price action. But what you got to remember is that on every chart, you have the y-axis, which is price action, which I already gave you the solution to that earlier, but you also have the x-axis, which is, okay, just because you know roughly what direction price is going to head towards, you also kind of need to think about when that might be likely to happen. And red folder high impact news for the USD is one of the best ways that you can do that. And that also means that for today, time that we're going to be looking for a trade today is going to be the hour before the news, the hour after news. So assuming news is 10 a.m. today, in fact, we don't have to assume news is at 10 a.m. today, we are going to start looking for this liquidity sweep to happen sometime during 9 a.m. And leading up into 10 a.m., you want to start seeing the lower time frame kind of shift towards the upside. This is known as a CISD. And if that happens and, you know, we just don't get a catastrophic kind of dump where the price action just completely closes below, what is this, 62,500? Or if you just get a candle close below 62,500, or more specifically $62,450, then this trade today is just going to end up being a no trade, which is absolutely fine as well, right? It's Mondays. Days like this tend to be slightly lower probability because, you know, Monday tends to be like what we call the opening range of the week, which basically, for the same reason that we don't trade the Asia session, because it can be tougher to kind of predict direction, considering it's the first session of the day, and sometimes it may just be looking to rebalance positions from the night before. Sometimes it could be looking to set a new direction for the day. But the thing is, it's kind of a coin flip. It's a little bit harder to tell. Same thing here, right? It's not to say that Mondays are completely untradeable, but it functions very similarly to Asia, where it's the opening range of the week, and it can be a little bit harder to tell. And even if price action tends to align, again, it's the opening range. So today is probably the best Monday that we're going to get for the rest of the entire month. But if I'm going to be honest, I have a very specific set of criteria that I'm looking for. And I don't honestly even think that this liquidity sweep play right here is going to be the absolute best, because chances are by the time you get this liquidity sweep, it's hard to imagine a world that you do not actually get a candle close below like 62,600 or something. And this is going to end up becoming a bearish order block, right? This is going to become a bearish CISD, and you're actually going to be looking for a short instead. So better way to play this in the event that we do get a bearish candle close beneath this level is that we can use today as kind of step one of, you know, a multi-day trade. If we end up getting a bearish close, it means that in terms of the 1 hourly time frame, we're going to get a major CISD. In terms of the daily chart, we're also going to start getting a bearish candle close, which you know what that means. Tuesday, Wednesday, you can start looking for a big short towards the downside. So that's how I'm going to be playing it today if we get that CISD. And earlier on, you might have remembered that I said that there were two possible scenarios that we should be looking for today. And the other one is going to be a bounce from this order block straight up. So right now, you're already technically in the order block. Like, you know, the definitions of order blocks, which is something that beginners tend to struggle with, is that it can be a little bit subjective, which is true, because the definition of an order block is literally a candle or a series of candles in the opposite direction before you get like a big aggressive move in the other direction. Which, if that sounds confusing, essentially is this series of last few down close candles before an aggressive move towards the upside. So you could technically argue, okay, the order block is here, but you could also argue it's here because, truthfully speaking, this whole thing can be technically considered an order block. Now, considering that price has already started filling the top half of this order block, and clearly price is still heading towards the downside, I would like to assume that the order block that we're looking for is going to be right here. But the other problem with using this order block, which I don't think, again, today is, for me, this lowers the probability of the order block, is the fact that it's so close to a bunch of relatively equal lows, which, by the way, over the weekend, I published a video basically explaining to you why I never trade into relatively equal lows and highs. Like, it doesn't mean that they're always not going to work. Statistically speaking, they are just a losing play, and I like to avoid them. Just to give you an example, I have a 78% win rate on these public Bitcoin calls. Can you guess the similarities that most of my losses have? That's right. It's trading into relatively equal lows and highs. So overall, I'm going to play today like really safe. The biggest kind of signal for me is if we get this order block bounce and we just start putting in like some major 5-minute CICs back towards the upside, then I would be interested. But for now, I'm also like, as much as I kind of tease the fact that, okay, today is the highest probability kind of trading Monday that we're going to have for the rest of the month, it is still a Monday at the end of the day. And we tend to get the best results using the system if we just kind of let Monday do its thing, which is set up the direction or just set the tone for the rest of the week. And then we can take advantage of that. If you don't know what that means, then just subscribe and stay tuned, because if this is your first time following the channel, you're really going to see how we can kind of like, I don't want to say read the markets, because that's not what we're trying to do, but like just by virtue of following the system, we're able to be on the right side of the market a lot of the time. And like, again, proof is in the pudding, right? We've kind of been documenting these trades for the last year and a half or so. Which, lastly, if you'd like to learn the system for yourself, feel free to click the first link in the description box below to work with us one-on-one. 50% of the students that come into this program tends to end up getting funded or just having the ability to go full-time into trading. If that sounds good to you, just book a call and find out. Like, we're not going to shove things down your throat or hard sell you on anything. Just feel free to click the first link in the description box below. And also, giveaway. You guys have less than 4 days left to sign up. And outside of that, I'll see you guys later on X, where I'll be posting any trade updates. Ciao, ciao.